the dollar is a high yielding currency. And if you think about the start of the year, so many people made the argument that if equities go up, the dollar should weaken, and the dollar's strong despite equities at record highs. And that's because it's part of the carry trade. So we're positive on the dollar and we're positive on carry as well.
Are the correlations in place across equities, bonds, currencies, and commodities, like the moonshot in commodities so much? Are those correlations normal right now into the summer, George Saravelos?
Well, I would say they're very different from last year. And this is something we've been writing about for a while, because if you look at the last few years, the world was dominated by this negative supply shock. So you had low growth, high inflation. That was bad for equities, and it was bad for bonds as well. But now we're in a more normal world, so to speak, and it's all about demand. Do you have demand holding in? And therefore, you can have yields still high, which you do, but equity strong as well, because the demand side of the economy is proving very resilient to these high levels of central bank rates. So I would say the correlation has gone back to being a bit more normal after being a lot more abnormal over the last few years.
So, George, give us your thoughts, your perspective here with a little bit of hindsight. What's happening with the Japanese yen? What has happened over the last several weeks? And kind of what's your view here?
It's probably the most interesting currency in developed markets at the moment. I think what's happening is simple, that the Bank of Japan is just too slow. It's very dovish, which means if you look at real rates in Japan, they're minus 2%. So everyone else, even the Swiss, have positive rates with a one handle or above, and Japan still stands out. So even though policy is normalizing, it's normalizing from such a low base that it doesn't do anything to materially erode that carry disadvantage which the yen has. So we think as long as the Bank of Japan goes very slow, which they are, the yen will stay weak. And they're going slow because they still don't believe inflation is at 2%.
Right, exactly. So if we think about the U.S. dollar then in that context, I mean, is there any reason to think this dollar will not remain strong here versus pretty much everything else out there?
Well, I think there are two ways you can get a weak dollar. The one is if you believe in a U.S. recession and therefore a sharp Fed cutting cycle, which many people did 6 months ago, but we haven't believed in that scenario for a while. So from my perspective, even if you get a Fed cutting cycle, it's not going to be steep. The dollar's still going to be a high yielder. So that's one scenario to get a weak dollar. The other one is if you get a weak dollar policy after the US election. And what I mean by that is not just statements on the dollar, but outright policy to restrict capital inflows, for example, tax on foreigners. We don't think that's going to happen either. Instead, we think we're going to get a restrictive trade policy. So we're in the dollar stronger for longer camp.